All reports and figures point to a dull property market, especially for the Mumbai region. But the surprising factor is there are enough takers for ready-to-move-in flats and even lived-in flats. The resale market of Mumbai has actually seen a spike in prices over the last 3 quarters, say a few reports, selling at a record premium compared to the primary market. But how long will this continue? Nikhil Sivdas joins us with this report.
Michelle D'Souza is a cautious investor in the city's volatile realty market. For years, she's been seeking to trade up from her existing apartment. Last month, she felt the time was right and finally took the plunge in a move that has reaped excellent returns.
I sold my flat, which was 1,050 square feet. I sold that for 1,30 lakhs. And I invested in this flat, which was 1,900 square feet. I know this is going to appreciate 3 years hence, and the extra sum that I got from this sale is also making money.
Michelle is one among many making it big thanks to the city's resale market. According to data from JLL and corroborated by recent sellers, prices here are usually 15 to 20% higher than the primary market. However, over the past 3 quarters, it has been averaging at least 35 to 40% higher. So why have prices increased so dramatically? Industry experts credit it to the fact that builders have not yet increased prices for new launches and the fact that home buyers prefer ready-to-move-in projects.
The supply is so slow that I do not believe that the ready-to-move-in market will ever be challenged. The speed at which Mumbai as a region is growing, we are not able to keep up pace with the speed at which one needs to build.
New launches in areas like Mulund, Chembur, Bhandup, Ghatkopar and Kanjurmarg are now selling at least a 35% discount to resale properties in the same area, with a similar trend emerging in the western suburbs, specifically the Andheri-Borivali belt. This variation in pricing has seen smart investors exiting from the existing units and using the premium to invest in new launch properties.
So we've actually sold very recently, 2 months back around March, a property for 17,000. Moved this client to Kandivali Lokhandwala, which was like 3 kilometers from this place, at 11,000 rupees a square feet. So, and not only was he able to buy a bigger apartment, we managed to give him 2 apartments for the price of 1.
However, experts warn that this trend may not last much longer. They claim that transactions in the resale market have been drying up, with home buyers staying away from resale properties that have now become unaffordable.
When these premiums increase, when these premiums go from 20 to 40%, this is really clear indication that resale market is overheated. If it is overheated and there are transactions happening, then we are comfortable. If it is overheated and no transactions happening, that is a clear case of correction in happening.
This, coupled with the availability of cheaper units in the market in the form of new launches, has experts convinced that the resale market is headed for a price correction.
The primary and the secondary market will never be able to equate, but yes, the 40-50% differential that we see in pricing is narrowing down already. And I am looking at a range of 20 to 30%. I mean, it would be foolish for anyone to pay anything more than 20% differential to a similar property in a similar location.
So if you are looking to be a smart investor, then now is the time to divest from your existing holdings and invest smartly in new launches. But you better hurry, because if experts are right, then prices will soon correct in the next couple of quarters. From Mumbai, Nikhil Sivdas, NDTV.
That's a curious case of Mumbai, and we've got Ramesh, Nair, COO of JLL India, and Indu, Sadh, Director Sales, MumbaiPropertyExchange.com, joining us to get to the bottom of that story. Ramesh, what's going on? I mean, you're saying the resale prices have climbed so much, or the differential between resale prices and primary have gone up, and they're bound to come down. But you have the Nifty scaling 7,000 today. You think anything's going to come down in the property market going forward?
Manisha, it's very important to look at why does a typical Mumbaiite want to buy a secondary home than a primary home. Firstly, in terms of delivery risks, quite limited, buying a home which is already ready. Secondly, on the tax aspect, if you're looking at an under construction apartment, you obviously need to pay the service tax of around 3.7%, VAT of 1%, that's straight 4.7%. Also on the carpet area ratios, we've seen that existing apartments offer you better efficiency on carpet area in terms of newer apartments. Also on the maintenance front, existing secondary homes, the maintenance is lesser than newer apartments which have a lot more amenities. And lastly, existing secondary homes are in much better locations than where newer apartments are coming up. So all these reasons we have seen over the last couple of years. The difference typically used to be only around 15–20% between primary and secondary homes. Thanks to these 4–5 reasons and a lot of buyers moving towards the secondary markets, we've seen this gap actually widen to around 40%, which we believe is not sustainable and has to correct, which is quite evident over the last 3 months. What we are seeing is prices, the volumes in the secondary market has drastically dropped, and any market where the volumes drop, it obviously has to lead to a correction in prices.
Indu, would you agree? Some of the points which Ramesh has made are very interesting. The fact that, you know, your tax benefits or under construction property are not that high on a home loan there. There are also other taxes that you have to worry about and take care of. And very, very interestingly, you get more carpet area in older properties and they're in better locations. Would you agree with those?
Yes, I definitely agree with that, because the resale market is a need-based market basically, and it's a perpetually evergreen market. In our experience, we've seen that most home buyers in the resale market are looking for ready possession. They're not willing to wait for those 4 to 5 years, you know, into the under construction projects, and you know, they need something which is in their close vicinity, and therefore they would find 1 or 2 flats available, let's say, you know, in all the buildings nearby, as compared to they wouldn't find a new launch necessarily in the area that they're looking at. Also, there is a large section of buyers who's not confident of the possession timelines offered, you know, by the builders today, of the land titles being cleared, you know, being cleared in terms of the pre-launches that are being offered. And therefore, they are very conservative and they don't want to risk their capital, and they want to, you know, stick to the resale market. Also, the carpet ratio efficiency, which has been absolutely squeezed out in the new pre-launches, is a major issue that a lot of our clients come up with. And when they compare the pre-launch, you know, as compared to the resale apartments, they definitely say, you know, the rooms are much smaller, the balconies have disappeared in the newer projects, and therefore they find value in money, you know, value for money in the resale apartments. So yes, I do agree on that.
Okay, Ramesh, when you say that it is an overheated market and it's likely to come down, the premiums of 35 to 40% over the last 3 quarters, so where do you think it will settle down in the coming couple of quarters?
See, if you look at the typical Mumbai buyer, he is basically around 25 to 40% of buyers in any project is an investor slash speculator. He's definitely not happy with buying a ready apartment unless he sees capital appreciation, drastic capital appreciation. So a regular apartment doesn't give you more than 1.5–2% rental yield on an annualized basis. So that will be the driving factor behind this correction. It's tough to kind of put a number, but we believe it has to at least correct by somewhere in the range of 7 to 10%.
Indu, the primary market has been extremely dull. I mean, inventory overhang figures of the Mumbai market, entire Mumbai region, have just been increasing over the last 1 year and have dangerously crossed, I mean, all figures of 24 months has become history now. Maybe we're taking 36 and 40 months as safe to buy in a Mumbai market. Do you think that post-elections there will be a little bit of traction in buyers who are sitting on the fence are likely to come back? That's what everyone's talking about, but will it happen?
Yes, if we do have a stable government coming in, we do see positive signs in the real estate industry. So we have to wait for the, for the election results to come in. So yes, definitely.
Ramesh, how confident are you that buyers will come back? I mean, there are 2 theories and there are equal number of people divided on either side saying that there are many other issues why the buyers are not coming back.
Manisha, volumes have definitely dropped, but prices haven't. If you look at the bottom of the residential market, which was the second quarter 2009, which is exactly 5 years back, we have noticed that the residential prices in Mumbai have gone up 78% in the last 5 years. In Navi Mumbai, it's gone up by around 82%, and in Thane, it's gone up 84%. So all these three markets which constitutes MMR have considerably gone up. Although in terms of unsold inventory today, all these three markets are anywhere between 20 to 36 months. We have just not seen prices come down in Mumbai in the last 5 years.
Okay, so Indu, what are some of the key micro markets? Take all of MMR. Which one would your favorites be in terms of where traction, prices, buyer, all are going to return?
If you're talking about, let's say, for the new launches, then yes, the central line right from Vadala, Chembur, Ghatkopar, Thane, this is on the central line. On the western line, I would see Goregaon to the Kandivali belt. That is where we've seen the most amount of traction. So yes, we do see buyers coming back into these areas. The central line also because of all the infrastructure that has come into place, the Eastern Express Highway, the Eastern Freeway, the Santa Cruz Chembur Link Road. So therefore the central line is a favorite for all the investors, and therefore we've seen a lot of new launches and successful new launches in this area.
All right, are they being successful only because they're launching at very reasonable prices? Now the room and the elbow for developers to just keep increasing prices with every launch has gone, hasn't it, Indu?
Yes, surely. Like we had a Kalpatru launch in Thane, for example, which was launched at a very reasonable rate, and therefore they sold about 700 flats in about 3 days' time. We had another example of a Runwal project on LBS Road, which launched at 9,900, and it received an overwhelming response because they sold around 400 flats in about 1 week's time. So that also got a very good response because they have been offering those attractive rates.
Okay, fair enough. Ramesh and Indu, thank you very much for joining in. Mumbai, always a market which excites everybody and is a barometer of what's really happening across the country as well. So, resale markets heated up, primary markets not yet so, but the curious and of course the most amazing part of Mumbai is what happens to sales. Don't worry about that. Prices simply don't come down because there's just not enough stock of homes in this city.